there, I'm Lisa Doyle with Sereno Real Estate, Christie's International here in our amazing East Bay. So welcome to our market update. So here we are, first part of March, and boy, the questions have just been flooding in about the real estate market and how is the year starting off. So I want to give you guys an update. We've definitely started the year strong. It's such an interesting bit of roller coaster the last few years, East Bay real estate. So our East Bay, of course, is a pretty broad area. I'm going to list the cities down below so you guys can kind of watch the 580 to 680 corridor and everything in between. But here we are, like I said, one of the things that we always track, as you guys know if you watch market updates, is where are we with the active and pending ratio. It's all about supply and demand 100%. Interest rates playing a pretty heavy role in what's going on with the market, so I'll give you an update on that. But here we are in, like I said, first part of March, there's in our East Bay 668 active listings in all of our East Bay, which is very low. There's 505 pending. So if you guys remember back when the market was at its very big peak, we had dramatically more pending than we had active. So now we're pretty stable. We're almost even, right? 668, 505. Some of our cities actually have still more pending than active. So I'm going to run you guys through just some of the surrounding cities just to give you an idea where we are. But one of the things that everyone's been wondering is, why is inventory so low? So we'll talk about that in a second. And I don't see that changing anytime this year. So I even had a conversation with a gentleman a couple days ago, and everyone has their opinion, and there's definitely no crystal ball. All I can do is give an educated kind of prediction about where we're heading. But a lot of people thinking that the market's going to start falling this year, and I have to tell you, all of the numbers are telling us the opposite. So here we are at Danville. There's 61 active. There's 45 pending. San Ramon, 54 active, 53 pending. So San Ramon and Dublin are definitely the hot spots. Dublin has 33 active and 40 pending. That's the one area that we are over in addition to Pleasanton. So Walnut Creek is 150 active, 83 pending. And then Pleasanton, 50 active and 49 pending. And of course, we work the entire East Bay. If you have questions about your area, if you're not listed, let me know. So again, Dublin, San Ramon, typically the hot spots. Lots of families coming from the South Bay come into all of our area, but those two cities tend to be the most popular kind of destination for a lot of the families that are moving from the South Bay. And that's during COVID, that segment of the people coming to our area really drove the pricing up, and we're still seeing that. About 62% of the families that are buying here in our East Bay are still coming from the South Bay, so it's still pretty big influx. And then everyone always asks a question about the high end. What's happened in the high end? So this week, 3 houses went pending over $5 million. So that market's still remaining strong. And I have to tell you, right now, I calculated everything that's pending, and there's about 38% of everything that's gone pending has seen multiple offers. And then a big segment of the rest of the homes have been selling very close to asking prices. So we're just not seeing the market doing anything but getting stronger. 2023 was a good, healthy year, but a little softer, right? Interest rates were closing in on 8% last year. We are down now to the low to mid sixes. And my prediction, no crystal ball, my prediction is by midsummer, will probably be close to the pre-pandemic interest rates hovering around the 5%-ish. That would be my guess. So for those of you that are looking to buy homes, you're obviously going to refinance once they drop down. But now is an opportunity where still demand is good, but I think it'll get stronger, just a heads up. And then something I want to show you guys, I have a couple of slides to back up what's going on in our market, just to show you guys a little bit of sense of what's going on. And this is more of a national data. So this first slide I want to show you is inventory based on where we were. And if you look at this, it says inventory is rising, but we're still very low. So if you look at the blue figure, it says here, same week in 2023, from this week to last week, that we are 15.6% higher inventory than we were this time last year. But if you look at the red slide, we're almost 40% lower than we were back pre-pandemic, 2019. So we had dramatically more on the market, and most of our cities were more than the 40%. But this is a national statistic. East Bay was running close to this, but even a little stronger. If you look at the next slide, so when we talked about interest rates going from almost hovering close to 8%, right, down to the mid to low sixes. If you look at this data, and even this is even an $800,000, if you look at the very low end of this graph, an $800,000 mortgage between 7 and 6%, the difference in payment, it's staggering. So if you go from almost 8% down to the low sixes, and our price range average market is somewhere close to the 2 million, But the difference in payment is $526 when it's only an $800,000 loan. So I'm going to run the data for my next update, and I'll give you guys numbers around the $2 million. But it's staggering. So you're looking at $1,500 lower payment just because the rate falls a 1% difference. So it's significant. And that's why most buyers, this year having rates starting to show a decline is causing so much more interest in the market. This is something that's interesting. And the gentleman I spoke to a couple days ago, his opinion was opposite, that we would be falling, there'd be a lot of crashing. And this is one data point that we'll share that I don't see that likely happening, even if we see an increase in interest or in our inventory, which I don't expect. So if you look at this graph, it says 38% or 38.7% people in our country are owning their homes free and clear. And our data in the East Bay is right along with this. We've been tracking this for years. 28% have mortgages of less than 50%. And then you've got 32% of everyone else. So again, we've got a huge 75% of our market has a mortgage at 50% or less as far as what they owe. This is one factor that will cause the market to stay more robust. Because you figure if someone gets into trouble financially and they have to sell, we see that still, people that either a change of job position or just a family situation that changes and they do need to move, you still see they have equity so they can sell their homes. And so the chances of this causing like our market having a decline like we did back in 2008, one of the biggest factors back then, average consumer in America had less than 10% equity back in 2008. I mean, the difference, again, is staggering. So if you guys have questions, I'm so happy to help. I'm Lisa Doyle. You guys call me back if I can do anything to help you guys. Take care, stay well, and I will talk to you soon.